Welcome to County Portal, your simple source for local government services and public records. Let's get started.
Ever looked at your pay stub and thought, wait a minute, why is my Social Security tax higher than my federal income tax? You're not alone. It's a super common question, especially for lower and middle income earners, and the answer comes down to how these two very different taxes are calculated. Let's break it down. The single biggest reason is that Social Security tax is a flat tax, while federal income tax is a progressive tax. A flat tax means you pay the same percentage on every dollar you earn, up to a certain annual limit. For Social Security, that rate is 6.2%. It doesn't matter if you make $30,000 or $130,000 a year, you're paying that same 6.2% on your earnings. We also have to include its partner, Medicare tax, which is a flat 1.45%. Together, they make up your FICA tax, totaling 7.65%, and they are taken right off the top of your gross pay. Now, federal income tax is completely different because it's progressive. This means your tax rate gets higher as your income increases, but it happens in stages called tax brackets. Think of it like this: your first chunk of income is taxed at a very low rate, like 10%. Once you earn past that amount, your next chunk of income is taxed at a slightly higher rate, maybe 12%, and so on. This means your effective federal tax rate is often much lower than your top tax bracket. But here is the real game changer: deductions. Your federal income tax isn't calculated on your total salary. It's calculated on your taxable income, which is your salary after you subtract a bunch of deductions. The biggest deduction for most people is the standard deduction, a large amount of money the government says you don't have to pay tax on. You might also deduct contributions to a 401k, health insurance premiums, or other pre-tax benefits. All these things dramatically lower the amount of your income that is actually subject to federal tax. Social Security tax, however, doesn't care about most of those deductions. It's calculated on your gross wages before the standard deduction and many other deductions are applied. Let's use a quick example. Imagine you earn $40,000 a year. Your Social Security tax is simple, 6.2% of $40,000, which is $2,480. For your federal income tax, you first get to subtract the standard deduction, which might be around $14,000, and maybe you contribute $4,000 to a 401k. Now, you only have to pay federal tax on $22,000. After applying the progressive tax brackets to that much smaller number, your total federal income tax might only be around $2,400. In that scenario, your Social Security tax is indeed higher than your federal income tax. So, to recap, it's because Social Security is a flat tax on your gross pay, while federal income tax is a progressive tax on a much smaller, adjusted income after all your powerful deductions are factored in. I hope that clears things up and makes your pay stub a little less confusing. Thanks so much for watching. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel for more simple explanations of complex money topics.